For many seniors, the first reaction to a headline like this is not excitement. It's caution. Congress gives final approval. Social Security extra payment this month. You've seen headlines before. You've heard promises before. And too often, those promises either turn out to be misunderstood, exaggerated, or simply not true. So the real question isn't how much am I getting? The real question is this actually real? And what does it really mean for me? That hesitation is completely understandable. Over the past few years, there have been countless online claims about bonuses, stimulus-style checks, permanent increases, and surprise deposits that never materialize the way people expected. That confusion creates stress. And when you're budgeting carefully month to month, stress is the last thing you need. This time, however, something did happen. Congress has given final approval to a measure that allows certain Social Security-related payments to be issued this month under specific conditions. The key phrase there is specific conditions. This is not a blanket bonus for every beneficiary. It is not a permanent increase to your monthly check, and it is not a brand new stimulus program, but it is real. It is funded. And for some recipients, it will show up as an additional deposit during this calendar month. Now here's where it gets important, and where many headlines stop short. For some people, this extra payment will feel like new money. For others, it will simply be a shift in timing. And for many, there may be no visible change at all. All three of those outcomes can be correct at the same time under the same legislation. So, what determines who sees what? Why would two neighbors receiving Social Security have completely different results this month? And how can something be approved by Congress but still not apply to everyone? That's what we're going to break down carefully today, because the difference between an early payment and extra income matters. The difference between a timing shift and a permanent increase matters even more. And misunderstanding that difference can create budgeting problems next month that no one wants to deal with. By the end of this update, you'll know exactly what final approval actually means, whether this change affects your benefit category, and how to protect yourself from the confusion and the scams that tend to follow announcements like this. Headlines can move fast. Social media rumors move even faster. But your financial stability deserves accuracy, not excitement. Today, we're going to walk step by step through what Congress actually approved, how the Social Security Administration implements changes like this, why some SSI recipients may see 2 deposits in 1 month, how retirement and disability schedules factor in, and why this does not automatically mean a permanent increase to your monthly benefit. We'll also talk about Medicare deductions, how net payments can look different from gross amounts, and why scammers tend to surface whenever payment headlines appear. There's one important detail about the calendar this month that changes how deposits are issued. And understanding that detail makes all the difference between feeling relieved and feeling confused. So, let's take this slowly and clearly and start with what final approval truly means. When you hear that Congress has given final approval, it sounds dramatic, it sounds definitive, and in a legal sense, it is. Final approval means a bill has passed both chambers of Congress and has cleared the last procedural steps required for implementation. Funding is authorized. The responsible agencies, in this case, the Treasury Department and the Social Security Administration, now have the legal authority to carry out the provisions written into that legislation. That is very different from a proposal being discussed in committee. It is very different from draft language circulating online. And it is very different from rumors spreading across social media. Final approval means action can happen. But here is where clarity matters. Final approval does not automatically mean a brand new benefit has been created for every single recipient. It does not mean Congress voted to send a bonus check to all seniors. What it means is that specific payment mechanisms already built into the Social Security system are now fully funded and authorized to operate as scheduled, including certain timing adjustments and reconciliations that result in deposits being issued this month. The distinction may sound technical, but it is crucial. Social Security is not a simple online payment system. It is a massive administrative structure that operates on calendars, eligibility categories, inflation calculations, and statutory rules. Sometimes legislation doesn't change how much you receive overall. Instead, it protects when and how payments are issued. And in certain months, those timing protections can create what appears to be an extra deposit. That is what is happening here. Think of it this way. If your regular payment date falls on a weekend or a federal holiday, the Social Security Administration does not delay your money. Instead, it moves the payment forward to the previous business day. That way, beneficiaries are not left waiting. On paper, that's simply an accelerated disbursement. But in practice, when one payment lands at the end of one month and the next scheduled payment arrives within the following month, it can look like two payments were issued in close succession. The yearly total does not increase. The timing shifts. This is one of the most misunderstood aspects of Social Security. When deposits cluster within the same calendar month, it feels like a bonus. But when a later month has only one visible deposit, because the previous one came early, that month can feel tighter. The system balances out over the year. The calendar just doesn't always make that balance obvious. Now, in addition to timing shifts, final approval also allows the Social Security Administration to process underpayments, corrections, and certain administrative adjustments that may have been delayed during budget negotiations. For some individuals, that could mean a reconciliation deposit. For others, nothing changes at all. Eligibility depends on your benefit type, your payment schedule, and your individual record. Two people receiving Social Security retirement benefits could experience completely different outcomes this month, and both would be correct under the same law. If you appreciate updates that explain the full picture without exaggeration, consider subscribing so you don't miss important changes like this. Clear information makes a real difference when it comes to protecting your income. Now let's talk specifically about why some people will see two payments this month and why that detail is creating so much attention. For recipients of Supplemental Security Income, or SSI, the payment schedule is straightforward on the surface. SSI is normally paid on the first day of the month, but if the first falls on a Saturday, Sunday, or federal holiday, the payment is issued on the last business day of the previous month. That rule exists to prevent delays. However, when that shift happens, it creates an optical illusion in your bank statement. For example, if the first of next month falls on a weekend, the SSI payment will be deposited at the very end of this month instead. If you already received your regular payment earlier in the month, that means you could see two deposits within the same calendar month. One is your regular monthly benefit. The other is next month's benefit paid early. It is not additional money added on top of your annual total. It is simply next month arriving sooner. This matters tremendously for budgeting. If you treat that second deposit as extra income and spend it immediately, next month may feel unusually tight because you will not receive another SSI payment during that calendar month. The money already came early. Over the course of the year, nothing has increased. The calendar just rearranged when it appears. For Social Security, retirement, disability, and survivor beneficiaries, the system works differently. Payments are staggered based on your birth date. Typically, if your birthday falls between the 1st and 10th of the month, you're paid on the second Wednesday. Between the 11th and 20th, the third Wednesday. Between the 21st and 31st, the fourth Wednesday. Because of this staggered structure, most retirement beneficiaries will not experience the same double deposit effect that SSI recipients might see. However, under certain conditions, such as reconciled underpayments or administrative adjustments, an additional deposit can still appear. Here's the important takeaway. Seeing 2 deposits this month does not automatically mean your benefit permanently increased, and not seeing 2 deposits does not mean you were excluded from something you deserved. The outcome depends entirely on your payment category and schedule. The system is functioning as designed. It just doesn't always look intuitive when viewed through a monthly bank statement. And there's another layer that adds to the confusion: cost of living adjustments and how they intersect with calendar timing. Because when those two factors overlap, the numbers can look even more surprising. Let's walk through that next. Now let's slow this down even further and separate this by benefit type, because that's where most of the confusion begins. Not all Social Security programs operate the same way, and assuming they do is where misunderstandings take root. Start with SSI, Supplemental Security Income. SSI is needs-based. It is income-sensitive. It follows strict monthly resource limits, and it is almost always paid on the first of the month, unless that date falls on a weekend or federal holiday. When that happens, the payment moves to the previous business day. So, if the first lands on a Saturday, the payment arrives on Friday the 31st or 30th, depending on the month. On a bank statement, that can create what looks like 2 payments in one calendar month. But technically, one of those payments belongs to the following month. This detail is especially important for SSI recipients because SSI eligibility calculations are based on income and timing. Fortunately, the Social Security Administration accounts for these calendar shifts automatically. You are not suddenly earning extra income in the eyes of the program simply because your payment arrived early. However, from a personal budgeting perspective, it can feel very different. 2 deposits in 1 month can create a sense of financial relief. But if that second deposit is actually next month's benefit arriving early, the following month may feel unusually quiet. That's why careful planning is essential. Now compare that with Social Security retirement benefits. Retirement payments are not income-based in the same way SSI is. They are earned benefits based on your work record. The staggered Wednesday schedule spreads payments throughout the month depending on your birth date. Because of this structure, retirement beneficiaries are less likely to see 2 routine payments land in the same calendar month purely due to the weekend shift rule. However, administrative adjustments can still result in additional deposits. For example, if there was a prior underpayment, perhaps due to a delayed recalculation, corrected earnings record, or spousal benefit adjustment, that reconciliation can show up as a separate deposit. That deposit is real. It is not an advance. It is not early. It is a correction. But it applies only to individuals whose records required adjustment. Your neighbor may receive one. You may not. And neither situation indicates an error. Social Security Disability Insurance, or SSDI, follows the same birth date-based Wednesday schedule as retirement benefits. So the same logic applies. Timing shifts are less common than with SSI, but reconciliations and corrections can still occur depending on individual case history. This is why it is completely possible for 2 people living in the same building, both receiving Social Security, to experience entirely different outcomes this month. One may see 2 deposits because of a calendar shift. Another may see a single regular deposit. A third may see a slightly larger amount due to a reconciliation. All of those outcomes can exist under the same congressional approval. Now let's talk about cost of living adjustments, because this is where another layer of misunderstanding develops. COLA, or cost of living adjustment, is not directly set by Congress each year. It is calculated automatically using inflation data, specifically the Consumer Price Index, for urban wage earners and clerical workers. When inflation rises, benefits increase accordingly. When inflation stabilizes, increases may be smaller. Congress can approve funding and administrative mechanisms that ensure these adjustments are processed smoothly, but the percentage itself is formula-driven. So, how does COLA tie into this month's extra payment discussion? In some cases, when timing shifts overlap with annual adjustments or reconciliations, the deposit amount can look unfamiliar. For example, if a benefit was recalculated or adjusted after a COLA update and the adjustment was applied retroactively, that difference may be paid in a lump sum. That can appear alongside a regularly scheduled payment. To the recipient, it looks like extra money. But in reality, it is money that was already owed under existing rules. Here is what this update does not do. It does not create a permanent monthly increase beyond established COLA changes. It does not authorize an ongoing bonus. It does not establish a recurring stimulus-style payment for all seniors. Any claim suggesting that every beneficiary will now receive additional monthly income going forward is inaccurate. If this breakdown is helping you understand what's really happening, consider sharing it with someone who might be confused about their payment this month. A clear explanation can prevent a lot of unnecessary stress. The most important thing to remember is that Social Security is a structured system. It runs on formulas, calendars, and eligibility categories. When Congress grants final approval to funding mechanisms, it allows the system to operate without interruption, especially during budget negotiations or fiscal deadlines. That stability matters, but stability does not always equal expansion. And there's another detail that can make deposits look different than expected. Medicare deductions and net payment amounts, because sometimes the headline number is not what actually hits your bank account. Let's talk about that next. Now, let's talk about something that often causes even more confusion than timing shifts: the difference between your gross benefit and your net deposit. Because when people hear about an extra payment or see a larger figure referenced in headlines, they naturally compare it to what lands in their bank account. And sometimes those numbers don't match expectations at all. Your gross Social Security benefit is the full amount you are entitled to before deductions. But many retirees and disability beneficiaries have Medicare Part B premiums automatically deducted from their monthly payment. Some also have Part D prescription drug plan premiums deducted. Others may have voluntary tax withholding or garnishments applied depending on their situation. What actually arrives in your bank account is the net amount after those deductions are removed. So here's where it gets tricky. If an administrative adjustment or reconciliation occurs, it may apply to your gross benefit calculation. But if your Medicare premium also changes, or if a deduction is applied in the same cycle, the net deposit may not reflect what you expected from the headline alone. In some cases, people see a larger gross amount, but only a modest increase in their bank account. In other cases, if a premium adjustment overlaps with a timing shift, the deposit may look slightly smaller than anticipated, even though nothing is wrong. This is why reviewing your Social Security statement, either through your mailed notice or your online SSA account, is so important. The statement breaks down exactly what your gross benefit is, what deductions were applied, and what net amount was issued. The number that matters most for your budgeting is the net deposit. That's the amount you can actually spend. Headlines may reference overall funding or gross payment figures, but your household budget depends on what hits your account. And this is also the moment when scams tend to increase. Whenever Congress approves anything related to Social Security payments, scammers move quickly. They rely on confusion. They rely on urgency. And they rely on fear. You may receive a phone call claiming your extra payment is on hold and that you need to verify your banking information. You may receive a text message saying you must confirm eligibility to release funds. You may even receive emails that appear official at first glance. Let me say this clearly. The Social Security Administration does not call you out of the blue to request bank information in order to release an approved payment. They do not charge fees to process deposits. They do not require you to click a link to confirm eligibility for a legislatively authorized payment. If a payment is authorized and you are eligible, it is issued automatically using the payment method already on file. If anyone contacts you claiming action is required to receive this month's payment, that is a red flag. If someone pressures you to respond immediately or threatens suspension of benefits unless you provide personal information, that is another red flag. The safest response is to hang up, delete the message, and contact the Social Security Administration directly using the official phone number listed on their website. Staying calm is your best defense. Scammers depend on emotional reactions, excitement, or fear, but the truth is simpler. Approved payments are processed automatically. There is nothing special you need to do to unlock them. Now that we've covered timing shifts, eligibility differences, Medicare deductions, and scam risks, there's one more critical piece to discuss. If you do see 2 deposits this month, especially if you're receiving SSI, how should you handle that money responsibly so that next month doesn't feel unexpectedly tight? Because this is where careful planning can make all the difference. If you happen to see 2 deposits this month, especially if you receive SSI and your next month's payment arrived early, the most important step is mental reframing. That second deposit is not a windfall. It is not bonus income. It is not an increase to your yearly total. It is simply next month arriving ahead of schedule. And how you handle that timing difference can determine whether next month feels stable or stressful. The safest approach is to treat the early deposit as if it still belongs to the following month. In practical terms, that may mean setting it aside in your account and using it gradually when the calendar turns, rather than spending it immediately because it appears available. Some people even move the early deposit into a separate savings sub-account temporarily just to avoid accidental overspending. That small action can prevent a lot of frustration later. Why does this matter so much? Because the human brain naturally responds to what it sees. 2 deposits in 1 month can create a sense of relief, maybe even abundance. Bills feel easier to cover. There's breathing room. But if that relief leads to additional discretionary spending, the following month may feel unusually tight when only 1 payment arrives. The yearly math hasn't changed. The calendar just rearranged when you received it. If you are receiving a reconciliation or underpayment correction, meaning the extra deposit truly reflects money owed to you from a prior calculation, then that is different. In that case, you may consider using it strategically. Paying down high-interest debt, covering essential home repairs, catching up on medical expenses, or strengthening a small emergency cushion can all provide longer-term stability. The key is intention. Whether it is early money or corrected money, using it thoughtfully protects you from future stress. This moment also highlights something larger about how Social Security works. The system is designed to provide consistency over the course of a year, not necessarily perfect symmetry within each calendar month. When weekends, holidays, or administrative corrections intersect, deposits may cluster or shift, but over time, the structure balances. Now, let's address a question. Many people are asking, will this happen again next month? The short answer is no, not as a recurring feature. There is no indication that Congress has approved a permanent monthly extra payment. There is no new program establishing ongoing bonus deposits. What happened this month is tied to timing mechanics and authorized funding provisions within the existing Social Security framework. Future double payment months can occur again, but only when calendar conditions repeat. For example, whenever the first of a month falls on a weekend or federal holiday, SSI payments will continue to shift to the previous business day. That's not new policy. That's long-standing procedure. But it does not create additional annual income. It simply rearranges the schedule. For retirement and disability beneficiaries, reconciliations or corrections may appear occasionally depending on individual records, but those are case-specific, not universal. They are not tied to a new recurring congressional bonus. It's important to separate 3 things clearly in your mind. 1. Calendar shifts. 2. Administrative corrections. 3. Permanent benefit increases. What we are discussing this month involves the first two, not the third. Congress's final approval provides stability. It ensures that authorized payments can be issued without disruption. It protects against delays during budget negotiations. That stability matters enormously, especially for seniors who depend on predictable income. But stability is not the same as expansion. This month reflects a system functioning according to its rules, not a dramatic overhaul of those rules. And as we close, there's one final piece that brings everything together. What you can say with confidence about this update and how to move forward without confusion. So, let's bring this all together, calmly and clearly. Congress has given final approval that allows certain Social Security-related payments to be issued this month. That part is real. The funding is authorized. The Social Security Administration has the legal authority to process payments according to the rules already built into the system. There is nothing unofficial about it. There is nothing speculative about it. But here is what is equally true. This is not a universal bonus for every senior. It is not a permanent increase to your monthly benefit beyond existing cost of living adjustments. It is not the beginning of a recurring extra payment program. What some people are seeing this month is the result of calendar timing shifts, administrative reconciliations, or previously authorized adjustments being processed. If you receive SSI and the first of the month falls on a weekend or holiday, your payment may arrive early, which can create the appearance of two deposits in one calendar month. If you receive retirement or disability benefits and your record required a correction or recalculation, you may see a separate deposit reflecting money that was already owed. And if you do not see any additional deposit at all, that does not mean something went wrong. It simply means your payment category and schedule were not affected by this month's timing mechanics. The most important thing you can do right now is simple. Review your statement. Look at your gross benefit. Look at your deductions. Focus on your net deposit, the amount that actually reached your account. If two deposits appear and one represents an early payment, budget accordingly, so next month does not feel unexpectedly tight. If a reconciliation appears, consider using it in a way that strengthens your financial stability rather than assuming it signals ongoing increases. Stay cautious about unsolicited calls or messages. No one needs to unlock your payment. No one should be asking for verification fees or personal banking details. Authorized payments are issued automatically. And perhaps most importantly, stay steady. Social Security headlines can sound dramatic. They are often written to grab attention, but your financial security is built on understanding the structure behind the headline. When you understand how the calendar works, how eligibility categories differ, and how deductions are applied, the confusion fades. Congress's approval provides continuity, not surprise wealth. It keeps the system operating as designed, and when used wisely, even a timing shift can be managed smoothly without disrupting your budget or peace of mind. If you found this update helpful, staying connected to reliable information is one of the best ways to protect your benefits. Policies evolve, calendars shift, administrative rules adjust, but clear understanding gives you control. Thank you for taking the time to walk through this carefully with me. Stay informed, stay cautious, and most of all, stay confident in your ability to navigate these updates calmly. I'll continue bringing you straightforward explanations as new developments arise.